Hey guys, this is Julie. It is June 10th, and this is the weekend market review. Taking a look real quickly at the risk disclosures. What I want to go over is the market decided late on Friday to tip its hand going into next week, which is kind of interesting. Usually into an FOMC meeting, the indexes have rallied up, and this is the first time that it's rallied down going into the FOMC meeting. So there is a lot of confusion on whether they are going to raise or not raise. Obviously, we have not had the economic data supporting an interest rate hike. Usually you want growth and strong strength behind that interest rate hike, and we just don't have the numbers backing it. So I think there's a lot of confusion. People deciding whether the Fed has backed itself into a corner and sort of has to do one just to get it done, but that doesn't make any sense if the numbers aren't supporting it. So other people are saying this is going to flatten the yield curve even more and start the recession. So getting a little bit of negativity into this particular June number. So let's be careful going into next week. We've got FOMC and interest rate decision from the Bank of England on Thursday. So we've got a lot of anticipated market action, including some other big report numbers coming out next week that will move the markets. CPI, PPI, lots of things. So getting it started Friday was the big drop day. Otherwise, we just were very volatile, mixed in the markets. Not really anything. This looked like it would be a good trend. Trend up, that was on June 1st. So that was 2 Thursdays ago, but last week, not really much as far as, standard buy the low, sell the high kind of price action until we got to Friday. And the NQ, interestingly, was the big dog down, and that started late after 10. After I had already turned my computer off. I made a really good amount last week, so I wanted to take my marbles off the table and keep my account. And if I had seen this, of course, I would have been jumping on this with both hands and feet, because what we want to do as traders is recognize that when you start seeing these strong pushes outside of this volatility band level, that's when you want to go in your lower time frame Unirinkos and absolutely look at this, take advantage. This went on all afternoon and closed on its low. I mean, just a credible downtrend until very late in the market. After 1:30, almost 2 o'clock, it decided to try to revert back to the mean, but it didn't even make it up there. It didn't even get past the lower VWAP. So on the smallest of the time frame, when you're coming in and out of this, makes it so easy to trade. When you see these great big gigantic trends like that, you just want to put your chart to a level that you can come in and just take the shorts. Like I said, if I had been here, I absolutely would have participated on each one of these shorts until the trend line, my super trend broke. There it is. And that's when you signal yourself that the move is over. And if you do inflections both, you can see that it starts going up at that point. So, and then back down. but basically that trend is over by that point. So this is a high-low inflections template, my most popular template outside of the direction guide template. This is straight out of the box. I'm not doing anything. I'm not coming in after the fact and optimizing a thing. This is exactly the signals that you would get if you have this template. And obviously we want to look to the higher time frame charts and make sure that the condition exists. And boy, oh boy, you could even trade, and I do a lot, trade the direction guide template and just take these. Aren't those wonderful? Um, in fact, I'll save an image of that. That's one of my keepers. So that's what we want. Just imprint that in our brains. And again, this is straight out of the box template. I'm not coming back to optimize or, anything like that. These are just the signals that you get with BloodHound. So this, of course, is not the direct, this is just all shorts. So you don't want to take shorts when the market's going up. But now don't think that you've missed anything, because we have a long way to go to the downside. If this was the start of the party, let's get this party started. This is just the very, very, very beginning. We have a long way to go, and this is what you want to see. This is exactly what you want to see, and either take them on the higher time frame. This is a pretty big Unirinco, but on the NQ you would want a big bar, and then take your smaller time frame and just load for bear. You can either take the inflections or the reversal short and get them all for these upper retracements. So I think we're starting to see the beginning of this downtrending market. Come over to my website this weekend if you get a chance and check out the videos. I've never done this before, but you've got to listen. I mean, as far as saying, come listen to one of these presentations, take the time to come and listen to this one that I've got, episode 133 of the Futures Trading radio show. Mark Yusko of Morgan Creek Capital. I mean, this guy is the real deal. I mean, there's no fake about him at all. He absolutely knows what he's talking about. And I think you'll find the time invested in listening to this is well worth it. It's 41 minutes and 44 seconds from beginning to end, probably 41 minutes of his interview. So very much worth the time. And leave some room next week. Look at the economic calendar while you're there and look at next week's schedule and be ready for these reports. Monday, probably nothing is going to happen. Tuesday, overnight, if you want to play the pound or the euro. We've got our PPI on Tuesday, right before that interest rate announcement, but that big number is on Wednesday. I got some good numbers in the morning. Core CPI, retail sales, and then the FOMC economic projections that will give us an indication of where the Fed is hoping to take this market, and how many more interest rate hikes that they're expecting after the economic data that's been presented thus far. Again, some more opportunities to trade that pound sterling. I'm telling you, I'm just so happy. I think we all are. Thank you, Theresa May, right? That was pretty good. I think we're all pretty happy. More pound stuff, and Philadelphia Fed manufacturing. So we've got some decent economic numbers next week, a lot in Europe, and then building permits, housing on Friday, and then a little bit of consumer sentiment. And this can move the bonds, by the way. this consumer expectation sentiment. So keep your powder dry, keep your pocket profits in your pocket, and come over and listen to Mark Yusko. Excellent interview, and we'll chat at you soon. I'm thinking this is the beginning of the down cycle for our equity indexes, maybe, like you've heard that before. Take care. Thank you so much.